Hi everyone, welcome to another weekly Forex forecast. My name is Justin Bennett with Daily Price Action, and in today's forecast we're going to talk about the Euro USD, we're going to discuss the Pound USD as well as the Dollar Yen. I'm also going to show you what I'm watching on the Dollar Swiss as well as the Canadian dollar versus the Japanese yen. I do think the US dollar has a decision to make over the next few weeks, so I'll show you exactly what I'm watching. Let's get started right now. A quick disclaimer that today's video is for educational purposes only. All views are my opinion and are not intended as investment advice. Forex is a high reward, high risk business, and you should not trade with borrowed money or money you cannot afford to lose. See the description of this video for the full disclaimer. Before we get started, be sure to hit that subscribe button below and also click the bell icon so you get notified every time I post these videos. First up, we have the Euro USD, and if you'll remember, we had this breakout from this descending channel on the daily time frame. So the pair had consolidated and moved lower within this descending channel for several months. However, it did find a bottom around this 109 area that I mentioned a while back. It then broke out from this channel here and retested that 109.90 support level that I also discussed a couple weeks ago. We had a really nice breakout following that retest of 109.90. However, notice how last week the pair did start to consolidate and pull back into some of these support levels, including that 111 area that I talked about last week. And Friday's session also tested 110.70. This 110.70 area is something we've been watching now since the pair was way back here. Notice how it supported the euro through this area. It then broke down on this candle, and then 110.70 began to serve as resistance. So that means that 110.70 for the week ahead is our key key support level to keep an eye on. And I would be really surprised to see the pair crash below it, close the day below 110.70 without some kind of fight from buyers. I do think that we could see some consolidation, at least between 110.70 and 111 to start the week. So if we do see it close below 110.70 though, we could see a deeper pullback from the euro. Now, if we do see a close below 110.70, there are two areas I'm going to be keeping an eye on. And the first is, of course, 109.90, which is where the euro broke out from back here. So again, notice how it closed above this channel. It then retested it here and formed this bullish rejection candle from 109.90. So 109.90 is going to be one I'm going to keep an eye on if we do get that far. However, there's also an area right around 110.20, perhaps 110.30, that I'm also going to keep an eye on. So notice how this 110.20 area served as support during that breakout. And if you notice back here too, it also served as resistance through these three candles. Before that, it was serving as support for the pair. Now, 110.20 is also the 50% of this recent rally. So if we drag the Fibonacci tool, you can see how 110.20, maybe 110.30 is right around that 50% mark right here. All right, now notice how 111 is also around the 23.6% level. But I do think that if we see a pullback this week, a close below 110.70, we could see a pullback into that 110.20/30 area and perhaps even 109.90. And also look at how the 61.8% Fibonacci lines up with 109.90. So I do still think that the Euro USD could have more upside to go, especially as long as this descending channel on the daily time frame is intact. So this is what I've been discussing now for several weeks. And if we notice, the pair recently came off of 109 support that we've been talking about now for quite a while. It has since rallied 200 pips, but nothing moves in a straight line. So if you notice how choppy this pair has been for the last year or two. So this could just be a correction lower before we get that next push higher, perhaps up into that descending channel top. Now, if we don't get a push lower this week and we do see the euro close back above 111, so this 111/10 area up here, if we get a daily close above that, it would re-expose that 112 area that we've been discussing. So that is what I'm looking for from buyers. However, again, I do think that we could see a deeper pullback this week, especially if we get a daily close below that 110.70 level. Next up, we have the British pound versus the US dollar, or GBPUSD. And this currency pair consolidated last week. So notice this consolidation after this impressive 800 pip rally over the last few weeks. But despite last week's consolidation, I don't see any warning signs to make me think that the British pound has topped out. So that might change, but as of now, this is relatively orderly consolidation, especially when you consider just how aggressive this rally was. Furthermore, the pound is also staying above that 127.70 level that I mentioned last week. So notice how 127.70 served as support back here. The pair then broke down and 127.70 started to serve as resistance. If we do see a daily close below 127.70 either this week or next, that would re-expose the 125.70 level based on some of these highs and lows recently. But again, as long as 127.70 is intact as support on a daily closing basis, I think we have to respect the potential for a move at least back to 129.80. Now it's going to take a daily close above 129.80 to expose 131.60/70 based on these highs through this area. Now a close above that would of course take us back to this high up here around 133.50. And also keep in mind too that the British pound is going to become incredibly volatile as we move closer to a Brexit decision. So this is one currency that if you have a high risk tolerance, you could trade. But as for me, I'll probably stand aside and look elsewhere. So just like the Euro USD, I do think it might be best to stand aside and wait for this consolidation to end before we look for the next leg higher if one is to materialize. And that could come from 127.70, or if we see a deeper pullback, a close below 127.70 would take us back to 125.70, where we could look for bullish price action from there. And last but not least, I do think that sellers, or at least bears of the British pound, have to be careful as long as the pair is coming off of what could be a double bottom. So on the monthly time frame, notice how the pair is bouncing from that 120 area. And while it's still early, this could be the start of a double bottom. So I do think that sellers need to be really careful, and any retracement, as aggressive as one might be, I do think you have to be careful here as long as the pair is starting to carve higher lows and higher highs. All right, so as long as this potential double bottom is intact and the pair is carving higher lows and higher highs based on this daily time frame, I do think that bears need to be careful trying to short the British pound. Next, we have the US dollar versus the Japanese yen, or USDJPY. This is one that I discussed back when the pair was trading around 106.80, and I said that a bounce higher was likely as long as 106.80 was intact as support. So notice how it served as support back here before breaking down and then becoming resistance. Now, we've also been tracking this potential inverse head and shoulders pattern. So notice how this has formed after this extended move lower. So it does qualify as a reversal pattern based on this left shoulder, the head, and this right shoulder. The dollar yen has also confirmed this pattern with this close, and it even retested the neckline on the very next candle. However, since breaking out, the dollar yen really hasn't gone anywhere. We saw the pair come up into this 109 resistance area based on this high through this area, break down, and then it became resistance. So 109 is going to be a key area that the pair needs to get above. Now, it doesn't just need to spike above it. As always, we need to see a daily close above 109 in order to see the pair push higher. So I do think the dollar yen is at a crossroads right now as long as this consolidation persists, because right now we do have a confirmed break of this reversal pattern, but follow through is lacking. And as long as 109 is intact as resistance and we don't have a daily close above that level, this pair is vulnerable. So we could see a rotation lower if we don't see that 109 area break either this week or next. So I do think the bullish potential is intact for the dollar yen, but until we get a close above 109, the pair is vulnerable within this consolidation. Now, a daily close above 109 would expose that 110.60 area, and the measured objective for this inverse head and shoulders is, as I've been mentioning, up there around 112.30, just based on some of these highs recently, as well as the height of this inverse head and shoulders pattern. Now, if we do see the pair weaken over the next couple weeks and start to break below some of these recent lows within this consolidation, that would be a sign of weakness, and it would also re-expose this neckline. But if the dollar yen is going to continue this rally, I would rather see a break higher out of this consolidation and a close above 109. The longer we go without that, the more vulnerable the pair could become for a break lower instead of higher. Next, we have the US dollar versus the Swiss franc or USDCHF. This is one that I wrote about on Friday, and we were watching this ascending channel that recently broke down. So as choppy as the dollar Swiss can be at times, this ascending channel is incredibly well defined. And notice how this candle right here did break below that channel. Now, we were also looking at the 99.30 level based on some of these highs and lows over the last few months. And I also pointed out the weekly time frame. So 99.30 is actually easier to see on the weekly, and you can see from here how this 99.30 level served as support through this area, and it did get choppy through here, so it's not perfect, but it then started to serve as resistance. Keep in mind too that these are not usually exact prices. So 99.30 could be as high as 99.50, and that's especially true on a choppy pair like the dollar Swiss. So if we look back here, notice how these highs come all the way up to that 99.50 area. And also notice where Friday found selling pressure right around 99.50. So this resistance area could be right around that 99.30/50 region. So I do think that we could still see some selling pressure to start the new week. However, that said, until we see some form of bearish price action from this area, I do think that trying to sell the dollar Swiss right now is a bit premature. However, at the same time, I don't want to buy the dollar Swiss given this recent break below ascending channel support and also this confluence of resistance up around parity. So I mentioned this on Friday as well, and there's not a whole lot of room between that Friday high and the next resistance area. And again, I also think that this breakdown could be significant and could cause the pair to return to this range support eventually. But I also think that timing is key. So we don't want to go in and sell this until it's ready to move lower. So for the week ahead, I'm going to be watching for bearish price action from that 99.30/50 area. If we see a close above 99.50, I'll be looking toward parity to see if we get some type of sell signal from there. And if we do see a daily close below 99.30 this week, that would be good enough for a sell signal for me. And it could also indicate a return to the support area around 98.40. Now, a daily close below 98.40 would take us back to 97.60. But again, it's going to come down to what happens between this 99.30 and 99.50 area this week. Last but not least, we have the Canadian dollar versus the Japanese yen, or CADJPY. This one has been my best performer over the last few weeks. So we looked at this pair when it was breaking out from this descending channel, and I also pointed out this 81.80 support level. So that was based on these two highs through this area, as well as some recent swing lows. Notice how the pair broke out, it then retested 81.80 and took off to the upside. Now, I mentioned my entry at 81.80 within the members area, and this one has performed extremely well. However, we are still waiting for a close above 83.20. So I talked about this last week that we do need to see the CAD yen close the day above 83.20 in order to expose 84.20 based on some of these highs. Now, if we do see a rotation lower this week from 83.20, I would be expecting buyers to try to defend 82.50. So that's just based on this little pivot area where we had these highs through here, the pair broke out, and 82.50 then began serving as support. So a rotation lower would likely encounter buyers around 82.50. Of course, a close below that would take us even lower, back to 81.80, and that would be a definite sign of weakness. So I want to see these higher lows and higher highs persist. So I wouldn't necessarily want to see a rotation all the way back to 81.80. I do want to see the pair stay constructive and continue to carve higher highs and higher lows. I also think this recent descending channel could in fact be an inverse head and shoulders pattern. Now, it isn't as clear as the one we just saw on the dollar yen. However, it does qualify as we have this left shoulder, the head, and the right shoulder. So furthermore, this also comes after an extended move lower. So we've had this push lower, the pair then formed this potential bottoming pattern. And another thing I pointed out recently too is how the measured objective for this actually lines up with this larger descending channel on the weekly. So the measured objective of this potential bottoming pattern lines up with this 85.20/50 area, which also intersects with this channel top. So as long as we're seeing the CAD yen continue to carve these higher highs and higher lows, and that 82.50 area is intact, this area right down here is intact as support, I do favor buying dips in the CAD yen for an eventual close above 83.20, which would expose that 84.20 resistance area. If you enjoyed this video, give it a thumbs up, leave your comment below, and be sure to subscribe to my channel. See you next time.